Alrighty, I think we're good to go. Yes, we are. Okay. Hey, everybody. Hope you guys are all doing well. Wait for a few people to kind of trickle in here and see how tonight goes. Hope you guys all had a good day. If you guys are watching the midday stream, thanks for coming back for a second round of information here. Let me pull down my shirt a little bit and button up this one. Oh, never mind. That means it buttons up to the top. I don't like that. Alrighty, let me get ready here, guys. Well, not get ready, but more like you just move something over here so it looks a little bit better from my perspective. There we go. All right, hey GT, round 2 coconut pie. I haven't had coconut pie in a while. I was at an event a while ago, and they had these tiny like apple pies, like that big. They were some of the best apple pies I've ever had in my life. It was some banking event for entrepreneurs, Web3 people. Close to the best apple pie I've ever had in my life. Actually, it probably was the best apple pie I had in my life, but I still think Dutch apple pies are better than regular apple pies, right? All right, everybody. Hey, Tony, hope you're doing well. And hey, KJ, bull run coming soon. You could see possibly a bear market rally, but the bull run probably isn't going to happen until, I mean, I have to say sometime like around 2023 or something like that. Maybe late 2023, we might see stuff pick back up after we find a bottom, probably in Q2, maybe late Q1 if we're lucky, but probably Q2. Loki says hello. Let me give Loki a treat very fast. Come here, Loki. My nose is going to be clogged up again, guys. I'm sorry. Not much I can do about it. It's fine until I start talking. There you go. There's one. And there's one more here. There we go. Yeah, I know. Booga, booga, booga. Yep. Yeah. We just got back from being outside. So. Yeah. Okie dokie. But what I was able to do, guys, before we get started off here on Bitcoin, the market, I'll tell you guys what's going on, why the market went down today, what's probably going to be happening over the next few weeks, and how to kind of manage all this risk. We talked a little bit about today. This will be more a concise explanation of what's going on. And this will be a stream for about an hour or so. My throat's still pretty messed up. I'm kind of surprised, probably because I haven't been talking as much. I thought I was fine until I actually started to talk. I have some nice juice here, though. This is apple juice, carrot juice, and ginger all grounded up together. So it's been helping out my throat. And it has a nice kick to it. All right, everybody. Let's kind of talk about, excuse me, what's going on here. Before we start looking at the charts, I just wanted to see how Bitcoin's doing over the last few hours. We're looking fine here. But basically, the reason why the market dropped today, primarily, you can probably look at this one right here. Yeah, this map. The reason why everything looks so bad today is we had a strong jobs report. We had very high, we had a 5% gain in the oil prices. If you guys want to check out oil very fast, this is the weekly chart, but the daily chart, we've had a really rapid growth in oil prices. And so let's talk about how each one affects the economy, how each one's actually going to affect you guys from a practical standpoint. Okay. Now, as far as oil is concerned, you've seen that oil has jumped up around 22% in the last 2 weeks. It's jumped up quite a bit here. Now, we have CPI data coming out next week, and that's going to be for the month of August, or excuse me, for the month of September. That data is not going to really have too much information here based off of the oil prices, because the oil prices up until last month were actually coming down quite a bit, right? Nice lower. We saw gas prices coming down slowly. The problem with this going forward is if gas prices remain higher because OPEC is cutting production, because America, we're not going to be upping production here as well. What you're going to see happen here is that those high gas prices are going to be part of the inflation calculations, if you will. And so when we have our inflation data come out for next month, it is going to be higher than expected, or higher than we want it to be. And it's going to give Jerome Powell another reason to say, hey, we need to do another interest rate hike. We need to do more rate hikes. And you guys know that when the market thinks that Jerome Powell is going to increase rate hikes or increase interest rates, that usually brings the market down. So that's the big red flag of what happened today. The bad thing here for today, as you can see, we actually took a pretty sizable jump up. Even with the news coming out of the last few days, we really didn't move up too much. a lot of that move was being priced in as we were kind of heading up to the event. When the news happened, we kind of went sideways for a couple days, slightly up. But then today we just jumped up from open to close around 4.75%, up 5% at one point. It was a very, very bad day for people that want cheap oil. All right. Now, a big caveat to all that as well. China is still under a lot of, sorry, I heard a big noise or something like that. Oh, my music's down this way. There we go. China is still under lockdowns in a large portion of the country. The fear right now is that they actually start to open back up just in time for a recession, thereby needing more oil. And then if they do need a lot of oil here pretty soon, because they do start opening back up, a lot more people driving, a lot more tourist attractions, you name it, just more consumption of oil, you're going to see oil prices really start to take off well above $100. Okay. Now, again, that just kind of leads back into that inflation spiral, as Jerome Powell wanting to put more money in, raise interest rates even higher. Now, that's the first reason we had a really bad day today. The other reason was over here as far as CNBC.com is concerned. September job gains affirm that the Fed has a long way to go in an inflation fight. All right. You guys have to understand that excuse me, that in order to get inflation down, Jerome Powell can't do anything about the supply chain side of things. That's up to Biden and Pete Buttigieg, who is and this is America, he is our transportation secretary, okay? That's who can affect the supply chain side of things right now, and of course corporations can do so as well. On the demand side, that's where Jerome Powell and central banks come into hand. This is a global thing, every country has their own central bank for the most part. Well, Jerome Powell wants unemployment to go up. He wants job losses, not job gains. He wants to see unemployment go up. He wants to see, like I said, layoffs. And, he wants to see some weakness, because if people feel like their job is in jeopardy, they stop spending as much, the demand will go down. And since we have low supply with high demand, it'll kind of balance out a little bit, if you will. Now, excuse me. Because we had a very strong jobs report, that means the economy is still going strong, which means, in theory, that he has to put the brakes on even harder to get things to slow down, which of course means we're going to be going even further off that cliff towards a recession. Nobody is happy about that, but if you're on Main Street, if you're happy you have a job, you don't really want this to go forward, right? So it'll be interesting to see how this pays out, but 263,000 new jobs on non-farm payroll. Because of this, basically, futures pricing Friday pointed to an 82% chance of a 75 basis point rate hike in November, then a 0.5 increase in December, followed by another 0.25 rate hike in February. That's going to really put the brakes on the economy. It's going to happen pretty fast. And you guys have to remember, when we talk about these interest rate hikes and everything revolving around them, there is a lag. Now, interest rates on the houses, mortgage rates, those go up a little bit faster. But the way it affects the economy, it does have like a good 12-month lag onto it. And we just started in March. Eventually, it is going to start hitting us and hitting us hard. We may start to see more drastic effects happening maybe at the end of this quarter, so Q4, like maybe November, December. But I think you're probably going to see a lot of this stuff hit mostly in 2023, right? So that's kind of what happened today. If you want to talk about it from a technical standpoint, we could. But what happened basically over the last few days, that's the way I would frame it, or even the last few weeks here, is if you go to the NASDAQ or the SPY or anything going on right now, you'll see that, let me get these moving averages on here. Chart. Let's go to chart right here as well. Okay. There you go. So you see that the NASDAQ got rejected off of its 20-day moving average. It got rejected here back in September 12th. It also got rejected right here, August 26th. We've just been getting rejected off of this. If you guys want to see any meaningful bear market rally, we're going to have to find a way to break out above this, and that's going to be an opportunity to see some type of breakout here. So in this circumstance, from a few weeks ago, we had a breakout. We held support. And then we managed to have a golden cross. So most people probably just bought here for safety reason. or they tried to buy this breakout, but you can see how volatile the market currently is, which is why, as far as I'm concerned right now, guys, and it was the NASDAQ or the SPY also got rejected from the 20-week moving average. The Dow Jones also got rejected from the 20-week moving average here. I'm not taking any long multi-week trades here like I normally would in the options market. What I'm doing to protect myself from unnecessary risk at this point in time is I'm choosing to do 1 to 3 day trades, primarily 1 to 2 day trades. And then on top of that, I'm having a lot of fun day trading. A lot of you guys might not have access to day trading right now because, of course, you do need the $25,000 capital in order to avoid becoming a pattern day trader and having your accounts locked. I have found success in this right now, and I just don't like the volatility I'm seeing in this current market because there's so much news coming out, guys, over the next few weeks, whether it's CPI data, war with Russia news, as far as like now Biden's talking about Armageddon, freaking everybody out, right? We're in a totally different zone right now where every bit of news can just be a big distraction, okay? So I don't want to open myself up to too much exposure, so I'm just chilling out in this market doing small short-term trades. Now, as far as Bitcoin, I told you guys this a while ago before I got sick. I do have a long. I've opened up at 18,500. At this point, you know, I was thinking about this earlier today after talking with you guys. My stop loss originally was the lows of 2022, so around like 17,600 or so. And then I moved it up back to where I bought it around the 18,500 level around here. I think right now I'm kind of thinking of just keeping it around this level, but if for whatever reason we have just a small breakdown from this, nothing that's too drastic, I may actually just move that stop loss back down, which is kind of something I don't normally do. I really want to see if we can have a breakout over the next few days, because what's happening next week is, let me double check the exact date here, probably Wednesday, right? But we have CPI data coming out, and that release date is going to be October 13th, which is next Thursday, maybe? Yes, it is next Thursday. I have an event to go. I got 2 events to go to next Wednesday. So it is going to be next Thursday, excuse me, at 8:30 a.m. So I'll be live probably during that. That can give us a really massive boost or a really nasty crash. Because gas prices were going down in the month of September, and then on top of that, we didn't really see, as far as I see with the store, I didn't see eggs go up a lot. I didn't see milk go up a crazy amount, right? I didn't see gas prices going down, of course. I think we have a good shot of inflation coming down a little bit, giving us an opportunity to bounce here. The play I have right now, as far as crypto is concerned, I'm trying to use this and hold it over the weekend to see if I can get something good out of it. If for whatever reason it hits my stop loss, something bad happens, so be it. I'll open up another trade in time for the CPI data to come out next Thursday. That is a long wait time from Friday today to Thursday next week, okay? But that's what I'm hoping for. CPI data is going to pull a lot of things out of whack. So if you guys are following technicals in a lot of different currencies or stocks or options, Forex, whatever you guys are in, please, please, please be careful, because that CPI data will just wreck any technicals that you have. Even if you've just broken out, if the CPI data is not on your side, you will lose a bunch of money in very, very fast, in a way where even the stop loss, you know, is going to get hit faster than you could possibly imagine. We've been through this before, but I just want you guys to have an update. Be aware of some stuff that could happen. But as far as this weekend is concerned, going into Saturday and Sunday, you know, we have an opportunity for both a breakdown and a breakout. Let's start with the breakout first, because I'm more excited about a breakout, of course, than a breakdown. We have an opportunity here pretty soon to break out. Let's say, oh, let me see. I would say this weekend, honestly, our goal is just to break above this level of resistance here. It's been a level of resistance for a while now. If we can manage to close above 20,400 or so, I think that'd be a solid move. And if you guys are looking at some of these technicals here, primarily the moving averages, let me just take off the actual candlesticks here. You'll see that pretty soon we have an opportunity for the first time in a while to have our 50 moving average on the 4-hour chart cross over the 200 moving average on the 4-hour chart, okay? Let me open this up a little bit more for you. We're getting close to the opportunity where we can actually have that big bump up here. I'd like to see this really have a reversal, guys. The technicals for the stock market are not nearly as nice as the technicals for the Bitcoin market right now. That's unfortunate. So it kind of makes me hesitant about buying into crypto right now. Excuse me, guys. Oh man, this cold. But basically, because Bitcoin has been kind of outperforming the stock market this week, we really have a good opportunity sometime Monday or so, maybe even sooner than that if we get one of those random big boosts out of nowhere. We have an opportunity to break out. It's up to you guys. It's up to you guys if you want to buy now. You guys want to buy on the breakout. You know, you can have fun with it. If you guys are buying now, just make sure you're going to be giving yourself a pretty generous stop loss in case we take a dip. We do a dip and rip type of effect. Okay, but we're very close to our first golden cross here since what is this? Really, yeah, this is back in July, guys. July. So just know it's been a hot minute since we've had this effect. Maybe that'll give us some good news. Historically, when we have these golden crosses here, in this example, we actually crash right afterwards, and that's because we were already crashing, I guess, beforehand. That's not a good example. Oh wow, we haven't had one yet since a good one since March. That's a while ago, guys. And we saw the golden cross here, get a good rip. Golden cross here didn't mean much, and the golden cross right here was good. But the golden crosses that usually matter are usually after the big drop, so it depends. But this is a pretty big drop. Didn't really help us out there. But in part that's because we had exchanges falling like flies, and that really put a lot of extra pressure on the market here. So I'm giving us a good 70 to 75% chance of having some type of testing of, let's say, 20,500. I might give us a 60% chance though on top of that of actually breaking out. And then my target price going into next week without the CPI data or anything like that, probably somewhere around 22,000. I'd like to see us take that next step up. That's if everything kind of works in our favor here. If we decide to go down, we're just going to have a simple breakdown. A lot of you guys may want to take some options here, or some shorts here, excuse me. These are going to be more of a day trading short, if you ask me. That breakdown is going to happen somewhere, maybe around 19,200, 19,100, 19,000. From there, I'm probably, if I do open a short, I would scale out like half of it around the support level around here of around 18,600 or so. And then the rest of it, I'd wait to see if we actually do get back down here to 2022 lows of around 17,600. But we've had a pretty solid support level down here, guys. It is going to take a lot of force to bring us back down. And I think at this point, because we've been holding so well, that force may actually have to come from a bad CPI data, bad news event to actually really push down some of those markets, okay? All right, so that's basically what happened today. My thoughts about the next few days going into next week. Members only stream is going to be tomorrow for everybody that's a Sapphire level member and a Diamond level member. If you guys have any questions, I'll be working for like 2 to 3 hours tomorrow on the computer, and we can do some really like deep 10 to, I guess, 25-minute dives into any coin or stock that you guys are looking for. Now, just so you guys know, I mean, to put it in practical terms, we had a bloodbath today, guys. Microsoft down 5, Apple down almost 4, Google down only 2.61. That was good. Meta down 4, AMD down 13%, Nvidia down 8%, Intel down 5, Qualcomm down 3.5, Tesla down 6.5, Amazon down almost 5. Oil more mixed here. Some oil was good. The oil companies that I like Exxon, they were down 1%. ConocoPhillips, I own that too. That was up 0.73. PXD, they were up 0.07, so untrue me on that one. But I'm still kind of heavy in oil stocks, guys. I know I've been telling you guys for a while, but there probably will come a time over during this quarter where I tell you guys I'm exiting those plays as well. So just, I just want you guys to know I'm currently in those plays, and I'm looking for more healthcare plays here. I'm being very picky about healthcare. CVS just dropped like 10% today, so it's still risky to be going in there right now. And last thing here, guys, Tesla is going to be heading for support here pretty soon around the $200 range. Let's maybe say around $208 or so. Keep an eye out for that, but Tesla's kind of like a falling rock right now, and I think that has something to do with just what's going on as far as make sure I can move my leg here so I'm not stepping on Loki. Probably something to do with Twitter. Maybe Elon Musk has to raise more capital since one of his banking partners backed out or something like that. Even bankers have weak hands, right? And so maybe there's a perception out there. I don't know. This is pure speculation. Maybe there's a perception out there that Elon Musk is going to have to sell some of his Twitter shares in order to cover that. And that might drop the price, or it could just be the fact that the whole market's been crashing. Tesla's overvalued, according to even Elon Musk, and it just has to come down a little bit, right? Because as we go down here, right, October 4th, we had Zachary Kirkhorn. He sold about $1 million worth of shares, but you know, we've only had small amounts of selling going on, and Elon really hasn't sold anything since the highs back over here in April, when he was selling off, you know, billions of dollars worth of stock and assets. He hasn't really been doing much activity as far as selling Tesla shares since that time, and it's been a hot minute since that's actually occurred. Okay, so just keep an eye on Tesla as well. That may be something you guys want to day trade. As far as what to expect today, I think today is going to be a fun day regardless of which way we go. If we do break down below the 20-day moving average, you guys know how I feel about these. Whenever we break down below a moving average or break out above them, we're usually having a pretty large candle. Unless we really just go sideways on this 4-hour chart, we have an opportunity to actually hit back up towards $20,400 today. And we have an opportunity to probably go all the way down here to like $19,000, if not actually $18,585. So either way, I think we're going to have a big pop or a big drop. If I was to guess, I'd probably say go up, but I'm a little bit more bullish than I probably should be at this point. But you know, I really want to see the golden crosses occur. We have a good opportunity, and usually when we have an opportunity to have golden crosses over the next few days, good CPI data over the next week, this is usually where I'd start taking some small nibbling long-term buys. Nothing, I'm not doing anything large, anything that's really life-changing money, but I'm doing small investments of anywhere between $1,000 and $5,000 to see where it goes from here. Okay. And then of course I do have responsible stop losses, some at 18,500 level. And in fact, actually it's actually from this candle bar, which is why I keep looking at it. Yeah, about $18,000 level, not 18,500. And then of course the 2022 lows, the only one that, yeah, and that's pretty much what I'm looking at right now. I'm waiting to see how this pans out, but you guys know we talked about this earlier. There's a lot of Fibonacci extension levels that I'm watching right now. And a lot of them happen to be around that $22,000 level. So I'm hoping we can break out above this first of all, then break out, and then try to retest 22,500, which will probably get rejected, maybe only temporarily before we try to make a big boom. But by then it's all going to matter about CPI data and nothing to do with the technicals here, because the CPI data is going to control everything we do going forward. You know, at least as we get closer to CPI data release next Thursday. All right, let's go over here very fast. There we go. And you can see the carnage from this morning. It was definitely not a good time. And hey, Chef, hope you're doing well. Hey, Luis, happy to see you. And hey, Roll Scratcher. And why this? Oh, I just explained that, but basically, the Federal Reserve wants to see unemployment go up. They want the economy to slow down. That way, inflation goes down because they're going to be lowering the demand, and the supply is going to be staying steady. So they want to see demand go down. In order for that to happen, they want to see layoffs. They want to see a worsening economy, not an economy getting stronger. That because we're overheating right now. That's what inflation is. We're just overheating, basically. So basically, the fact that the earnings report was so good means that inflation is going to be sticky, and Jerome Powell is going to have to increase interest rates. And that last part of increasing interest rates is why everybody was really ticked off today, or which caused the market to go down, basically. And higher oil prices scored by like 5% today. That's not good as well. That increases inflationary pressure. And then it can happen to see you. And hey, Chef Cake, there you go. I just had cake a while ago for my birthday. It was amazing. I just had pie the other day. It was also amazing. It was mini pies. Some of the best stuff I've ever had. And hey, Tony, more jobs. Exactly. Well, here, let's check out this article from CNBC very fast. I mean, I think this will be like, for some of you guys, I don't know why this is happening. I gave you guys maybe a pretty simple explanation, but this will help you guys out a little bit more. This juice is separating here. There we go. I don't want the apple juice on top and the carrot juice on the bottom. That would taste funny. There we go. All right. September's job reports provided both assurance that the job market remains strong and that the Federal Reserve will have to do more to slow down. The 263,000 gain in non-farm payrolls was just below analysts' expectations and the slowest monthly gain in nearly a year and a half. But a surprising drop in the unemployment rate and another boost in worker wages sent a clear message to the markets that more giant interest rate hikes are on the way. I don't know if I'd put the word giant in there. A giant is like over 100 basis points to me. But going forward here, guys, low unemployment used to feel so good. Everybody who seemed to want a job is getting a job, said Ron Hetrick, senior economist at labor force data provider Lightcast. But we've been getting into a situation where our low unemployment rate has absolutely been a significant driver of our inflation. Indeed, average hourly earnings rose 5% on the year-over-year basis in September, down slightly from the 5.2% pace in August, but still indicative of an economy where the cost of living is surging. Hourly earnings rose 0.3% on a monthly basis, the same as in August. So, no green light for Fed change. The reason we had a bounce over the past few days before the market started dropping recently, ignoring this article for a second, basically, is that everybody thought, oh my gosh, things are getting so bad. Now the Federal Reserve is going to have to pivot to stop everything from to go into hell, basically. Well, this said right here, we're not even close to hell right now, right? So that means Jerome Powell has the confidence to increase rate hikes. So Fed officials have pointed to a historically tight labor market as a byproduct of economic conditions that have pushed inflation readings to near the highest point since the early 1980s. A series of central bank rate increases have been aimed at reducing demand and thus loosening up a labor market where there are still 1.7 open jobs for every available worker. Friday's non-farm payroll report only reinforced that the conditions behind inflation are persisting. To financial markets, that meant that the near certainty that the Fed will approve a fourth consecutive 0.75 percentage point interest rate hike when it meets again in early November. This will be the last jobs report policymakers will see before the November 1st to 2nd Federal Open Market Committee meeting, FOMC. Anyone looking for a reprieve that might give the Federal Reserve the green light to start telegraphing a pivot didn't get this from that report, didn't get it from this report, okay? So I'm not going to read the rest of it here, but basically, you know, everybody feels that Jerome Powell is going to have to continue to raise interest rates, and he might have to raise them more than he already said he was going to. So he might actually have to do more than expected, which leads to more uncertainty. The market doesn't like that. Everybody's starting to worry, because what happens if we already have a bunch of interest rates and it really tears down the market? The Federal Reserve says, hey, we're going to pivot here. And then because of the recession, people not having jobs. Oh, sorry, Siri started talking to me, freaked me out. What you see happening at that exact point is, as people lose jobs, people stop spending money. So you go into like an earnings quarter of Q1 or Q2. You basically go into the earnings quarter seeing really, really bad earnings results, thereby tanking the market even more, even though the dollar will probably get stronger, yada, yada, yada. You're going to see a lot of bad stuff happen in that period of time as everything switches over. But during that slosh fest of just really bad news is going to be the best buying opportunity you're going to have for probably the next 20 years or something like that, or next 10 years at least. So that's where a lot of the fun is going to come into play. 2023 is going to be the year where I spend the most money dollar cost averaging. I've been dollar cost averaging a lot this year. I've been buying a little bit on the the dumps that we've been having, more than a little bit actually. But if we really do have this really bad event going into 2023 where we have a recession on top of high interest rates, because we still have to wait for inflation to come down before they pivot, right? That's where I'm like, hey, I'm buying. I'm not just buying like everything. I'm being picky. I'm buying this, buying that. I want some Ethereum. I want some more Bitcoin. I want some XRP. I want some Dogecoin, SHIB, whatever you guys are interested in. You want to start dollar cost averaging more heavily next year, but also be prepared that there's gonna be a lot of volatility. And I mean, there's always the possibility that people get laid off. I don't know what you guys' jobs are, but there will be layoffs in certain sectors. Right now, it seems like those layoffs, excuse me for my nose, guys, it's just freaking clogged up. A lot of the layoffs that I've personally seen happen to be in the realm of tech and not in the realm of like manufacturing and stuff like that. A few, but most of them happen to be tech layoffs. So if I go over here, Impossible Foods cut 6% of staff in second layoffs this year. So this is a Bay Area food company. Impossible. Let's see. Oh, it's a plant-based meat space. Okay, whatever. Facebook janitors are on strike. Okay. BioMarin lays off 120 employees to save $50 million a year with U.S. operations hardest hit. Right. Peloton, corporate workforce, of course. There. Twitter is going to probably have layoffs because they don't really do much. Yeah, so, there's going to be some pain. And if you guys have listened to Jerome Powell, what does he say? There's going to be some pain. It's just what's going to happen, guys. I just depends on how much pain we really experience at this point. And let me go over here. push this up a little bit. There we go. All right. You guys will have some good day trading opportunities as well coming up this week and next week. A lot of those revolve around different coins that are really popping off. So XRPs and stuff like that, good opportunity. Sheeb has an opportunity. I think Dogecoin also has a really good opportunity of having them pop this week. I haven't checked out a lot of coins, but those coins look pretty optimistic if we really do have some good CPI numbers coming out. Let's see. And hey, RW, and hey, Alien, my man, hope you're doing well. Biden and Buttigieg in charge here, God help us. I mean, politics aside, you know, a lot of stuff aside, right now, Buttigieg really isn't doing the best of jobs when it comes to supply chain issues. He's done okay, but not what I would say good or great or satisfactory, if you will. And I honestly, I think that's just because the way the American political system works is, remember guys, there was a good chance that Bernie Sanders might have been the nominee back when Joe Biden was running for office. But what happened is you saw like a lot of people before that happened drop out of the race so they can consolidate the moderate vote around Joe Biden and not have it kind of be split apart and have Bernie Sanders win all the electors, right? So, and you know, to say thank you for giving up your chance to become the elected leader of the strongest country in the world, he was able to get that job, right? So, I mean, it's a fault in our system, right? He's not really the most qualified person, but he does have a staff at the actual agency that can try to help him out. But yeah, he's not the best person for the job. That's just the way the system works, regardless of who's in power here. However, you know, we have to hope that, you know, over the next year, whatever they're trying to do, it still continues to get a little bit better. Because at the end of the day, whether you're talking about Democrats or Republicans, they each make things better to a certain degree. But, you know, in certain administrations, this is not like this. Some presidents are better than others. Some cabinets are better than others. You see a better trajectory of where the country is going right now, right? So, you know, probably not the best person for the job, but, you know, I don't think anybody saw all the supply chain issues coming back in 2021 or whenever Joe Biden actually formally took the role of president. But yeah, hindsight, a horrible decision. Horrible decision there for Buttigieg. Let's see. Hey, Shilton, I haven't checked out the FOMC minutes lately. I thought it was on November 1st, something like that. FOMC minutes. Yeah, it's November 1st and 2nd. So no FOMC minutes, then it'll happen November 1st through 2nd, which means it'll probably get released on the 2nd. And then Tony, UNG natural gas. Yeah, natural gas I think came down today. That's why it actually pulled it down. So you said UNG. Let me make sure. Yeah, okay. Oh, I don't like the fact that this is the okay. Let's see. A nice Head and Shoulders play that worked out if you wanted to buy some puts on it a while ago. That was really nice. Really far away from any breakouts though, unfortunately. Let's see what I can find here. Back to the daily chart. Has this worked out at all? Not really. There we go. Okay. And that's where the resistance was, right there. Okay. So if I was to trade this right now, which is kind of hard, of course, because you're going off of the LNG markets and not just this, right? You'd be seeing that we're finding a little bit of support for natural gas this week. We could also go back down here to the 50-week moving average. We don't know if there's going to be any news here, so this is going to be a little bit more risky than your average play. But you have a few weeks before there's any even an opportunity for it to have a death cross. Yeah, and you can see LNG had the same shoulder, head and shoulders here. So I'm gonna go back over here to the UNG very fast. You could try to buy down here around the $22 mark, like closer to $22.10 instead of the $22.94 you're looking at now. I would probably wait for it to come down a little bit more. I'm kind of worried that LNG is probably going to come down here a little bit sooner and actually try to come back down to 20 bucks, and then I might try to take a position on it. But right now, this is a little bit choppy here. I don't like this as much as let's see. This is the monthly chart here. It's had a really volatile time, as you can imagine, with all the news coming out as far as Ukraine is concerned. I might wait to, I might buy it somewhere between $22 and $20. And then the way I would look at this though, is I would be not buying options on it. I would just be buying it and holding it until it got back up towards $30 and sell for a pretty nice profit. That'd be the goal there. And that might take a month, it might take 2 months, but it would most likely happen, especially as we head into the winter, especially as all this drama with Russia is kind of escalating. You're probably going to see LNG creep back up towards 30 bucks. I don't know if we're going to go back to $35, but I think you have a good chance for it to come back up a little bit more. But I'd be a little more greedy here as far as how cheap I want to buy this sucker for. Only because it's LNG, and LNG, you guys know, it's all over the place right now. There we go. And hey, Candy, thank you. I appreciate it. I did like my birthday. It was very, very good. Let's see. There you go. Sushi was trying to break out earlier. I mean, guys, there's a lot of stuff that really wants to make a move here. We can talk about it here in a second. Let me just take a sip of ginger, carrot, apple juice. Ah, stuffy nose. I hate it. Okay, let's go over here. Let's go over to the daily chart. YouTube list. Okay. So Ethereum, looking for a breakout here pretty soon. It's holding support above the 20-day moving average. It's looking okay. Good opportunity to buy if you want to. Otherwise, you're going to be buying down here around $1,300, which is about 35 bucks less than where it is currently. And sorry again, guys, for the nose. Oh, this is going to be horrible, 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 horrible the next couple days. But basically, you have Dogecoin right now getting really close to breaking out above its 20-week moving average. 20-week moving average for the first time since October of 2021 is the last time we broke above that moving average there. It's been a hot minute since we've been back above it. We're really, really close. CPI numbers could really get us above there. On the daily chart here, excuse me, as long as we stay above this general trend line, I'm happy to continue owning Doge as if I was a swing trader or a day trader or something like that. Okay, or, well, primarily a swing trader for this example. So I'm still happy with Dogecoin. As far as ADA is concerned, we did see it break down a while ago. I took a short on it for like a couple days. It did okay, but I exited it actually a little bit earlier. I exited it like right around here on this like second day, when I probably should have held it on to a little bit longer, but you can see it's just been doing okay here. So ADA is something that looks pretty interesting. Backing up a little bit here, go to the weekly chart. I think ADA can have one of those strong rebounds that kind of pushes us back up towards either 45 cents, or if we're lucky, back up here towards 48 cents as we try to retest the 20-week moving average, which we haven't tested out in a long time. So I'm optimistic for this as well. Not as good technicals as a lot of other stuff, but it is at a very low price or compared to where it was in the past. So this could be a good opportunity if you guys want to buy at those major support levels. If you're buying ADA right now, if you guys are planning to buy ADA, you're planning on Bitcoin to have a reversal and actually break out over the next few days though, okay? Which will give ADA a really strong boom, but you guys just have to rely on, you know, Bitcoin pushing it up at this point. STMX, this is going to have another chance to break above the 20-week moving average here as well. This is basically a lot of the coins, they kind of follow Bitcoin, as you guys know, but the 20-week moving average is going to be interesting because if we're managed to break above that, then I think STMX will have one of those really big days that it's had over the past few months. And just so you guys can see what I'm talking about, I talked about this quite heavily during the streams over the past couple months. But here within one day it popped up 50%. The next time it popped up right here, it popped up 50%. And then the next time over here, it popped up within one day, 108%. I usually sell on these one-day pumps myself, and then I buy more coins as the price falls back down. I don't try to get the bottom price. So when I sold off a lot of my assets here at the orange line and up here even more, I started buying back the day after, right? Around here, I bought some around here, I bought some around here, and I haven't bought much since, but you can see the price has kind of gone down a little bit. I just want to own the coins because I believe the STMX will be good in the long run. However, when this thing pops, it really does do a good job popping here. So that's pretty interesting. Okay, now everything else as far as SOL is concerned, we had that breakdown a while ago. That was a beautiful day trade right there. That was or swing trade, if you will. At this point in time, though, you almost wanted to see this, can I pinpoint this a little bit better? You wanted to see this breakout work out, but it didn't. We got slammed down the last few days as far as Solana is concerned. So this breakout kind of what can put, so be careful with it. I think more realistically, what's going on here. Sorry, I got a message. We're just trying to hold the support level right now. I'm really hopeful we can, but of course we're looking for our first golden cross in the daily chart since July 18th. So maybe that's going to be enough to get us pumped up from here. But this one is SOL is just not as pleasant, I would say, especially since we just had a false breakout, which always sucks if you're on a chart, right? Ethereum Classic looking like it has an opportunity to make a move up here pretty soon. I mean, here, let me show you guys from this perspective. There we go. We're basically holding the 20-week moving average here and trying to bounce up, so there's a good level of support. However, we did break down below the support that I wanted to hold around 30 bucks or so. If you kind of look, zoom out here, the only thing really holding us up, right, it's really just the 20-week moving average here. Matic, go to daily chart here. That was a day trading thing, I think, maybe. Have an opportunity for the first golden cross in a hot minute, and by golden cross I mean the 50-day moving average, the 20-day moving average, both crossing above the 200 daily moving average, and it hasn't happened since 2020. That could be a really good sign for the crypto market, or just Matic in general, to have a really big boom. I haven't been buying much more Matic. I've just been doing dollar cost averages, but I did buy up a chunk over here during the June lows, and so far those June lows are up over 100%, so they've been working out fine. But Matic kind of does its own thing sometimes when Bitcoin is actually having its rally. So I do think there's a good opportunity for you guys to play with Matic. If I was to have a favorite, I think it would be probably Matic right now, just because it has a good history of having this really volatile moments when it does want to break out. A lot of other opportunities out there, but I do like Matic for this one. Dogecoin Mars, not nearly as good as other things. It's at a low point, so if you want to buy it just to buy it for at a low point to support, that's going to be a good play for you guys. The breakdown was pretty brutal though. A good short opportunity if you guys took it. XRP, a lot of good news coming out over the past few days. There's a chance the trial could end here pretty soon, giving a really solid boost to what's been going on in the marketplace for XRP. People are getting really excited as soon as the court makes its decision. If it's in Ripple's favor, you should see a really sizable pop, and I mean like a pop maybe past 60 cents or so. It'd be a pretty large pop. It'll fade back down, but it'll be a pretty sizable pop, guys. And we've had our first golden cross from the 20-day moving average crossing above the 200 since August of 2021. It's been a hot minute, guys, a really hot minute here. All right, and on the weekly chart, just so you guys can see, we just managed to break out above the 200 weekly moving average. Let's see how that performs, but a good solid resistance level if we do see XRP boom is going to be around 62 cents. That's probably where I would scale out if I do buy this for maybe a swing trade or something like that. Again, I'm not really doing swing trades right now, but if you guys are, it's going to be very high risk, but at least you're at a decent level of support right now as far as Bitcoin's concerned. All right, but Bitcoin Cash, 20-week moving average. We can go down the list here, guys. A lot of 20-week moving averages, a lot of them, and we're hoping that we have an opportunity here. Even SHIB, Want to break out above it. Usually when I break out above it, not close, not, you know, transfer over from closing one week to the next. We really do have a pretty sizable move here. On the daily chart for this as well, we have another opportunity for a golden cross. Last golden cross led to some nice gains. This golden cross, as long as we can hold support, may actually have give us a good move, and we could have our first golden cross in a long time where you actually see the 20 and the 50 cross above the 200 moving averages. All right. So we're Bitcoin here. See me. And I'm on this one. There we go. Okay. There we are. Let's see. Any applesauce. I voted pie, but cake can be good if it's the right frosting. It really is a frosting thing when it comes to cake, isn't it? The cake I had for my birthday was good frosting, very light because I'm on a diet. But basically it was a white cake with frosting in the middle of it, like, you know, frosting layers. But in that frosting, there was freshly chopped strawberries, and then it had frosting all around the cake. And then on top of the cake, there was mandarin orange slices, there was pineapple slices, kiwi slices, strawberry slices, and a few raspberries on top of it. It was extremely good, really good presentation, and it was very light and fluffy. I love those type of cakes. I think normally I'm a pie guy, but there are plenty of good cakes out there. Plenty of good cakes out there. But whenever I go to a restaurant and they're asking me what I want for dessert, it's usually going to be a pie of some type, unless it's a cheesecake. But the cheesecake is really picky because you want that good crust. You got to have it real good there. Excuse me, guys. Man, my nose has just killed me right now. There we go. All right. But at least for the next few days, guys, I just want to see us at least consolidate. And if we're lucky, we want to retest these highs up here, this resistance level of 20,389. If you want to get more specific, actually, that's probably the specific I'll get. That's really where we want to break out. And I don't mean just break out above it. We want to get above it and close above it, thereby starting this next journey where you can see shorts capitulate just a little bit and give the bulls an opportunity to have another surge up here pretty soon, okay? All right. But okay, everybody, I'm going to end the stream right now. I gave you guys all my information for the couple days. I will see you guys tomorrow, but my nose, guys, I don't know. You guys could probably tell it a little bit, but it's like really, really bad. And I'm actually having trouble breathing right now because of it, because I can't exhale after all the talking I'm doing. So I'll see you guys tomorrow, if you members. I'll also post out some videos pretty soon. One thing I'll also be doing here pretty soon for you guys as well is I'll put out a Dogecoin video just explaining what's going on with Dogecoin and the opportunity for a lot of these different stocks to have breakouts. Okay, a lot of that information will be coming out Sunday for you guys, the video wise. But for members, you guys will be able to see me tomorrow from like it'll start around noon my time, so around 12 p.m. Pacific time, 3 p.m. Eastern time. Okay, so I'll see you guys all later, and thank you guys so much for watching. Enjoy the rest of your night. And I'm sorry I have this little bit of a cold, but I get a nose thing. I don't want to stress myself out too much, so I don't